Well, I guess as far as the oil price goes here, concerns over what the Fed's about to do, and obviously also the weaker dollar may be offset by that.
Yeah, we had, as you mentioned, very choppy sessions here in New York, and we also saw that with Brent crude in London. The Fed and other central banks set to raise rates this week to try and tame inflation, and that has been weighing heavily on the oil trade because we did see the dollar weaken a bit. It managed to have oil come off its intraday low. Let's take a look at the 5-day chart, because in New York we saw West Texas Intermediate fall near $82 before rising back toward 86. It's been getting a bit of a lift in Asia trading. We've got down a few ticks now, but generally, as we mentioned, stabilizing. The same for Brent crude. Now, a lot of traders point out the bearish headwinds are still out there. In addition to the macroeconomic conditions, we've got slowing global growth and rising interest rates. Perhaps the most immediate concern, we've got the Biden administration now planning to release an additional 10 million barrels of oil in November from its strategic oil reserves. It's part of that huge release that was mentioned or ordered back in March. And this latest release comes as OPEC talks about further cutting production, and the EU seeks to impose a ban on Russian oil imports by year-end. Now, you're looking at Brent's year-to-date. You'll notice that big picture crude futures have lost about a third of their value since early June. So not much to push out of the recent range. Layer on the fact that United Arab Emirates is accelerating its plan to increase its output. It hopes to get to 5 million barrels a day by 2025. So a lot more oil coming on the market, while demand is a big question mark with these recessionary vibes.